Imagine waking up one morning and finding out the cash in your wallet is worthless. No more paper bills, no more coins. Instead, every transaction you make is tracked, logged, and controlled by a central authority. That's not science fiction, it's the future governments are planning right now with something called Central Bank Digital Currencies, or CBDCs. Today, we're diving into why governments are so eager to launch digital currencies, what they aren't telling you, and how this shift could change money and freedom forever. Let's start with the basics. A CBDC is a digital version of a country's currency, like a digital dollar, euro, or yen, issued directly by the central bank. Now, you might be thinking, don't we already use digital money with debit cards and PayPal? The difference is, your bank deposits are commercial money, technically a liability of the bank. CBDCs, on the other hand, are direct liabilities of the central bank. In plain English, it's like holding cash, but on your phone. For governments, CBDCs are appealing because they allow them to modernize payments, improve efficiency, and keep up with the rise of private digital money like Bitcoin and stablecoins. But there's more to the story. On paper, CBDCs sound amazing. Here's what central banks say: faster payments, no more waiting 3 days for a transfer to clear. CBDCs can move instantly, even across borders. Financial inclusion: in theory, anyone with a smartphone could access the system, even those without a bank account. Lower costs: digital money reduces the expenses of printing, storing, and securing physical cash. Stability: governments say CBDCs could help protect national currencies from the volatility of crypto. It all sounds great, but whenever something looks this perfect, you have to ask, what's the catch? Now we get to the heart of it. Why are governments truly interested in CBDCs? Here are the real motivations. With CBDCs, every transaction is traceable. Governments could see what you buy, where you spend, and even when you spend. Privacy as we know it could vanish. Imagine a world where buying a book, donating to a cause, or even purchasing fast food is tracked. CBDCs could be programmed with rules. For example, stimulus money that must be spent within 30 days. Or funds that can only be used on certain goods. It gives governments the ability to engineer economic behavior directly. Paper money is anonymous. You can spend it without leaving a trail. CBDCs would give governments the power to phase out cash, removing one of the last forms of financial privacy. CBDCs would make it easier for governments to collect taxes instantly, without evasion. They could also enforce negative interest rates, literally charging you to hold money, to force you to spend. China is already rolling out its digital yuan, and that puts pressure on the US, Europe, and others to keep up. CBDCs aren't just about money, they're about power on the global stage. This isn't theory. It's already happening. China, the digital yuan is in advanced pilot programs across multiple cities. Some employees are even being paid in it. Transactions are tracked through apps linked to the government. Europe, the European Central Bank is exploring a digital euro, with trials expected soon. The Bahamas, they launched the sand dollar, one of the first official CBDCs in the world. Nigeria rolled out the Naira, though adoption has been rocky. These case studies show two things: CBDCs are real, and governments are moving fast. Now let's talk about what this really means for people like you and me. Loss of privacy: once cash is gone, your spending becomes data. Data that can be used, sold, or even weaponized. Potential for censorship: if governments don't like what you're buying, they could block the transaction. Imagine being denied the ability to donate to a movement, buy certain books, or even travel. Cybersecurity risks: a single hack or system failure could wipe out access to your money. two-tiered economy. If CBDCs coexist with private money like Bitcoin, we could see a divide between government money and freedom money. So, what happens if CBDCs become the norm? Every transaction digitized, a fully cashless society. Convenience at the cost of privacy. Greater government power, financial levers could be pulled with the flip of a switch. Want people to spend more? Set an expiration date on digital dollars. End of traditional banking. If people can hold central bank money directly, commercial banks may lose their role as middlemen. Shift in global power. Whoever leads in digital currencies could dominate the future of finance. To be fair, CBDCs aren't all doom and gloom. There are benefits: cheaper cross-border payments, financial access for the unbanked, and smoother trade. But we have to balance those benefits with the risks to freedom and privacy. The real question is, do we trust governments to use this power responsibly? Central bank digital currencies are not just about money. They're about control, freedom, and the future of society. Governments pitch them as progress, but behind the curtain lies a tool that could reshape the relationship between citizens and the state. The end of cash may be closer than we think. The only question is, will CBDCs bring us financial freedom, or financial surveillance? What do you think? Are CBDCs the future we need, or the end of privacy as we know it? Let me know in the comments. And as always, thanks for watching. Subscribe for more insights on the future of money and technology.